Tesla is about to change their strategy going into 2023 in a brutal way. What Tesla is about to do to the rest of the industry is unprecedented and, dare I say, evil. But hey, life isn't fair. Unfortunately, the cost for Tesla investors is going to be very high in the short term. And this is why I think some big funds are selling out of their Tesla positions completely in the last couple of weeks. But in the long term, this strategy is brilliant. So I'm going to stop talking now and let Elon explain it himself, and then after that, I'll unpack everything.
In my view, we are already in deflation, and the Fed is just dealing with old data. The reality is, if we are in a recession, I think we are in a recession, and I think 2023 is going to be quite a serious recession. In my opinion, comparable to 2009, I don't know if it's going to be a little worse or a little better, but I think likely to be comparable. Do you want to grow unit volume, in which case you'll have to adjust prices downward, or do you want to grow at a lower rate or go steady? It's sort of a choice there. My inclination would be to still grow. My bias would be to say okay, let's grow as fast as we can without putting the company at risk, which would mean, in that scenario, profits would be low to negative during a recession, provided the cash position is okay.
Now, there's a lot to unpack here. Elon's about to lower prices to an insane level. So we'll actually estimate these new prices using a very simple mathematical model. But essentially he's saying we're going to break even and grow unit volume into a recession, even if it costs us the margins. But this is all speculation on Elon's part. How do we know this is going to work? Luckily for us, we've been running a little bit of an experiment here in the US. You see, there's a piece of legislation called the Inflation Reduction Act, which is going to take place in 2023. And Tesla actually introduced a 7.5K discount on December 21st to actually match the prices that we're gonna get next year, because a lot of customers were just putting off their purchase. So we have a little bit of a sample size here. And look at what happened to inventories instantly. All excess inventory pretty much vanished. So in principle, this works. But you see, this is not Elon's strategy. This is just a little taste. He wants to take it to an absolutely break-even point. So let's take it a step further and see where we end up. Tesla right now needs $1.7 billion to cover their operating expenses, but they make $104 million in the energy sector, $66 million in services, and on average they'll make $436 million in ZEV credits. And this is all per quarter. This means that Tesla needs $1.08 billion from the auto business to actually cover all the rest of their expenses. And this will be the actual break-even point. So in order to cover for those minimal expenses, they have to maintain at least a 5.9 gross margins on the auto business, which is a long way from their 27% gross margins. This is not counting credits. Currently, a Model 3 in the US costs around $47,000. But if you actually apply this new margin that Elon's gonna implement, it drops to $37,000. But remember, the Inflation Reduction Act takes effect in 2023, which means that this $7,500 credit is an immediate price reduction on every single Tesla. This brings the price of a new Model 3 in the US to around $29,600 and a new Model Y to $44,700. This is obviously without taking into account any state incentives, any savings in gas, none of that. This is just sticker price. And now comes the most important part of the strategy, which is the most ruthless and cutthroat thing I've ever seen coming from Elon Musk. This graph right here represents the US car market. Now it has shifted a little bit to the right because of inflation, but the overall distribution and behavior stays the same. This is the mainstream market and this is the mid-size luxury market. And we know the mid-size sedan market in the US is about 280,000 units. And the SUV luxury market is about 2.5 times that, which makes the whole market for Tesla in the US as of right now with the current prices about 1 million cars. Now, the whole market in the US is about 15 million cars. So let's do something fun real quick. Let's estimate a price elasticity function to get a sense of how big the market is for Tesla now at this new price point. In order to do that, we're going to write some software. I want to do a curve regression on 4 points, and that'll give me the demand curve for Tesla at this point in price. With this, you can calculate demand at any price point in time for the whole US market. And of course, it's an estimate. If we evaluate the new price for Teslas, which is going to be $34,000, we get that the new addressable market for Tesla is over 4 million cars. 4 million cars. From 1 million cars to 4 million cars. That is an insane amount. That is almost half of the car market, because you gotta remember that from 10 to 15, that's pickups. Let me not even go there. And this is why this strategy will destroy every single legacy OEM. They're all gonna go bankrupt. If Tesla gets 50% of the US market, they'll decimate everybody, and they could implement something like this in Europe and China to a much smaller scale because they don't have the new legislation there. Ford, GM, Lucid, everybody will go bankrupt. VW, even Honda, Nissan, and Toyota would actually feel it. Obviously, they own the lower scale of the market, which Tesla wouldn't actually touch, but still, But the most important question as a Tesla investor remains, why do all this? Why throw profits out the window? Well, I'll have Elon explain the second part of the plan.
I think that's still the right move long term, because there's also something that Tesla possesses that other car companies do not, which is extremely fundamental. That is that the cars are upgradable to autonomy.
So Tesla can make money on selling software, mainly FSD, but also premium connectivity as well. And the two dark horses that everybody's sleeping on is energy and services. People don't even know that energy and services both turned profitable in Q2. And if you actually track their margins, they're actually going up. But everybody's so focused on the auto business that they don't see services. It turns out that selling electrons at a big ass mass fleet is very profitable once you reach scale. Same with energy storage. The bigger the fleet grows, the more money Tesla will make on services. Once Elon Musk implements this strategy, 75% of all OEMs are going to go bankrupt or consolidate. And then after the recession passes by, they could normalize prices again and still print money. But this is going to be very hard for investors, because it's going to be a tough pill to swallow if he does this, to just forfeit every single profit. We've gotten used to like this PE. And I like profits. I want him to do buybacks. But I'm not gonna sell Tesla for this reason. And this is why I think T. Rowe and maybe even Capital Group are selling out of their position entirely. I think they saw this before I saw it, before anybody did. That's called insider information, folks. It's not smart money, it's connected money. Well, in case you didn't see, I broke down the possibility of this hedge funds selling out of their Tesla position and how that would impact Tesla price. So yeah, check out that video if you like this one. And then thank you very much for watching, and I'll see you next time.